All right. Hey, everyone. Welcome to the stream. This is my normal streaming time during the week. The thing is, today is a holiday, and the futures, from what I see here, are closed. So can't day trade the Nasdaq futures today, which is might as well, because usually when you have a holiday uh, environment and the futures, especially like when there's like a half day, it's usually not worth trying to take risk anyway. I've been through many instances, many occasions where I've tried to trade like those half day sessions. You lose money and then you got to wait 3 days for the market to open again. It sucks. And then you got to sit there for 3 days and think about your losing day. So, usually on a holiday, the best thing to do is something else. Okay. Or if you must be in front of your computer and you want to do something relevant to the markets, you can review your trades. You can go over, what has transpired over the week. You could do analysis for next week, but there's no reason here to risk money, right? Now, so what we're going to do here today is we're going to update the analysis from Monday, because usually my analysis, this is like what I do during my analysis stream. We look at trend, we look at levels, and we consider potential scenarios that may unfold during the week, technical scenarios, right? So we can update those, and also we can also review the trade strategy that I'm using with the Trade Scanner Pro for for our prop firm evaluation stream, because that's basically what this is, right? What I'm doing is I'm trying to beat the prop firm account in a sustainable way. Man, not one person on YouTube. You've got to be joking. It says zero. I only get some Twitter people here. Come on, man. Come on, YouTube people. Why do you got to depress me on a holiday? Not one. Can I get one YouTube guy? Eh. I know the market's closed and everything, but I thought, okay, maybe I'll get a couple of people. All right, I'm not going to complain about that for 2 hours. So those are the couple of things that we can do here today. Now, one thing that I'd like to mention, we got some good news. Stian, my developer, sent me an update for the Trade Scanner Pro. And I'm not able to show it here, but I have to experiment with it and then give him feedback. But I might be able to show it next week, just give you a sneak peek. But I've been waiting a while for this, and he sent me an update. So that's great news, because we'll be able to push this update soon. All right, I got one YouTube guy. Thank you for listening. One guy left Twitter and went over to YouTube. Thank you. All right, cool. So yeah, and feel free to say hello in the chat. I appreciate someone cares about my feelings. Okay, so anyway, Steen gave me the update, and I have to look at it. But he's made some dramatic improvements to the Trade Scanner Pro. One of the improvements is cleaning up some of these random signals that show up and all that kind of thing. So basically, a much better user experience. But I haven't played with it yet. So but I'll be talking more about that. That's a great thing that he's able to get that done. Also, Steen is now releasing his own scripts. So if you want to see, let's see if I could show you on TradingView. Hold on, let me see if I could pull up his username on TradingView is Crypto Snagger. Hold on, let me see if I can pull up. I want to see if I can pull up his page here. Okay, hold on a second here. Let me see if I can pull that up. Just give me a second. I'm going to type it in over here and see if I could bring it over there. Okay, hold on. That should be it. All right, and then let me see. Let me just double check something here. Hold on. I want to pull up the page here. You guys got to see this, because He's now he's going to share. He's going to release one script a month, he said. Okay, that should be it. Which is cool. A free script. And these are more advanced scripts. These aren't like nonsense. You know, Steen is great. He knows what he's doing. And so the fact that he's taking the time to produce these is very cool. So you should check that out. Here, I'm gonna put it up here. I'm gonna put it up on the screen so you guys can see. Hold on, I'm pulling it up here right now. I think I spelled that correctly. It should be it. Okay, yeah. So here's Steen's profile. Here, I'm gonna pull this over. Hold on a second. Let me pull this over here. Okay. Here, this is Steen's profile on TradingView. All right, hold on. What's this? Oh, okay. This is Steen's profile. Okay. And you should go to his profile and you should click on scripts. Okay, go over here. See, these are analyses that he wrote. You can go back, but he hasn't released any of these in a while. But that's okay. Like you don't need to see these anyway, right? But he wrote some analysis back then. But if you click over here to scripts, see this? Scripts, it should be here. Let's see, is it here? Oh, he hasn't published it. Maybe he had to unpublish it. He told me he published it. It should be here. Anyway, this is where they will be. All right, so you want to go here and follow him. And you'll be able to see his public scripts. I don't know what happened to his script. He had one. He must have maybe had to unpublish it for some reason. Or maybe it needs to be, what do you call it? It needs to be reviewed by, sometimes they need to review. TradingView needs to review it or whatever before they let it show up. So anyway, check that out, all right? That's Steen. And he's a great programmer. He's done some great things here. Hey, Hussein, how are you? So he's going to be releasing a script each month, and it's free. So check that out. All right. So by the way, if you want to share what city or what country you're from, that's always a fun fact. Like I said, what we're going to do here today is we're going to go over the analysis because the market's closed. If there's a chart you want to see, let me know. We got time to do that. All right. Cool. All right. So first thing we can start here is with Bitcoin. Right. So I just mentioned, in case you missed it, Steen updated my TradeScanner Pro script. He sent me the update. So I'll be able to start showing that off most likely next week. And he's cleaned up a lot of things. And I know there's some new visual cues in there. It's really cool. Okay. I just have to play with it and then give him some feedback. But, and by the way, everyone that has the TradeScanner Pro, once we push that update, you automatically get the update. So that's a really cool feature about TradingView. We push it on our side, and then you automatically get the most updated version. So that's coming. Steen sent me the update, so that means we almost have it to the point where we can release it to everyone else. And then the next step is going to be the overlays. Okay, so Steen is going to work on a support and resistance overlay, and then the matrix thing that I've talked about, where we can monitor multiple time frames at the same time without having to jump across charts. We can put in our own time frames and tell the matrix what to look for, and we can monitor like five time frames across 10 instruments at the same time. That's really cool. Okay. Yeah, Nugs. I you know what? I just want to maintain my schedule. It's a holiday, and yes, there are better things I could be doing right now besides talking to a couple of people. But I'm glad you guys are here. Hey, at least I got Hussein, I got you, so I'm not talking to a wall. For a minute there, I was talking. There was zero on YouTube. I was literally talking to a wall. But no, I had a few people on Twitter watching me. Anyway, yeah, I'm just trying to maintain my schedule, and I figure, look, it's an opportunity. We could do some analysis, and we can get some things out of the way here. Okay, so we can also do a strategy review, and it's a good time to do that, right? Just to kind of go back and look at what we're doing here to just help build that foundation for the newer traders who are trying to beat these evals. Now, one thing I have to say about these prop firms and the technique that I'm using here, this is not the best technique to beat the eval in the fastest way. It's definitely not. What this is it's a sustainable strategy. So there are other strategies where you can beat the eval, especially when the prop firm allows you to beat the eval in one day without getting penalized. There are better strategies that are more suited for that, but they're not sustainable. So what a trader has to do is you have to have your eval strategy to beat the eval as quickly as possible. And that strategy is only for that, which means it's going to be a big size, high risk strategy. And then you have to have another strategy or a similar one with smaller size so that is more sustainable so that you can get payouts. You can't use the aggressive strategy to get payouts. The reason is you're going to blow a lot of accounts with the aggressive strategy. But that's the whole point. One of the great things about prop firms is that you can buy a bunch of evals. You can buy them cheap, right? And you think the goal is to beat the eval as quickly as possible, not maintain it, which means you have to be prepared to spend some money, right? If you're getting evals for like $30 or $50 or whatever it is, you have to be prepared to spend a few, like you're going to buy a few of them, maybe 5, maybe 10. You have to be prepared to spend that money. So each eval is like your chance to go, you're going to go all in basically, and you all need to do is make one trade and get there. Now, there's something called the consistency rule. I'm just going to hype on this before we get on the charts here, but there's something called the consistency rule, which penalizes you for beating an eval too quickly. They don't want you to beat the eval in one day. Most prop firms have this rule, but there are occasions where the prop firm will say, okay, we're running a special and we'll allow you to beat the eval in one day without penalizing you. Apex is running that right now, by the way. So when you have that opportunity, that's when you use your aggressive strategy, go all in. You know, with this account that I'm using here, it's a 50K account. Like I said before, you can trade 10 mini lots. All you need to do is make 15 points on the Nasdaq and you've beat the eval. 15 points. You realize the market can move 15 points in less than a minute. But at the same time, if you're wrong and it goes 10 points against you, you've blown the account and you have to pay for another one. So that's, going all in on a 50K account. It's a little too aggressive, but that's just kind of the idea. All right. So let me know if you have questions about that. The prop firm space is a very interesting space. And it's a space that, here, that's why I'm streaming at this time, because I'm trying to be more of a participant in that space. I think the prop firms offer a unique opportunity that is not available in regular accounts. And that's what makes them special. I like to compare the prop firm world like playing tournament poker. When you play tournament poker, you don't play it the same way you play a regular game. Tournament poker forces you to be more aggressive in certain areas where normally you wouldn't. You'd go all in with garbage cards, for example, right? Because you have to. You really, there's no better, you have no better chance really of winning than maybe the cards lining up your way randomly and you go all in. Like my point is, there are strategies for tournaments that are unique to tournaments. And that's the same for prop firms. There are strategies that are unique to prop firms. And if you can learn them and employ them properly, you can take out some nice payouts without taking real ridiculous risk. Because what's really at risk is the registration fee or the setup fee and the setup, the fee for the eval. That's really what's at risk, which is pennies compared to what would be at risk if you were using a real account. On top of that, they give you margin that you otherwise would never be able to get. So, of course, they're happy to give that to you because that's what leads to wiping out accounts. But if you know how to use it properly, you can use it to your advantage. And it's a great training tool. Talk about training, right? What's great about the prop firms is, yes, you're using a practice account, but you can get paid out on it. And what I like most is you can go big with confidence, because if you're wrong and you blow $3,000 in literally a minute, you're like, all right, it wasn't real anyway. Okay, I need to fix my strategy a bit, but you can go in all confident compared to if you had a real $2,500 account and you blew that in 1 minute. That's a that reduces confidence, because you're like, man, I can't. I just blew $2,500 in a minute. Like, I can't afford to do that, right? Like, that works on you psychologically in an adverse way. Make sense, you guys? All right, so that's my prop firm rant. But you guys, especially if you're newer and you're really trying to make this work, really consider the prop firm route. Do some homework, look through some prop firms. I'm not an affiliate for any of them, and I do have my problems with some of them as well. But I plan to be an affiliate, right? So right now I'm not, but I plan to be one. But I'm looking, I want to align with prop firms that I believe are the best choices as far as the chances of beating their eval, their payout structures, all that stuff. I have a couple in mind. Like, I like Apex. The problem is they're not taking on new affiliates right now. So there's another. I like Top Step, not Top Step. Take Profit Trader. I like them too. But I every time I send them a request, they ignore me. They don't want me as an affiliate. I get, maybe I'm too small. I don't know. But they always tell me, oh, we never got it. I'm like, but I sent it like 10 times. Oh, we never got it. All right, I can't keep wasting my time, with these affiliate requests. So anyway, all right, enough of that. Let's get into the chart, shall we? If you want to see a chart, share it in the chat, and we'll take a look at it. All right. Now here, let me pull this up over here. By the way, if you like the stream, do me a favor, press the like button, press subscribe, help me out. Press the little bell so that you get notifications when I stream, so I can build up this stream. I'd like to stream in front of more than a couple of people. That would be nice. All right. Anyway, so let's start here. We'll start. We're going to talk about Bitcoin. We're going to talk about the Nasdaq. We're going to talk about the bond market. We'll take a look at gold. We'll take a look at oil. These are like all the major things that are moving. We can take a look at the dollar index. All right. So we'll start with Bitcoin. Right now, I'm going to make my Bitcoin chart big. Maybe we can even talk about my Q's position, because I haven't talked about that in a few days. I can give you a little update on that as well. And by the way, you guys, tell me in the chat, what are you guys in? Like, what are you guys doing these days? Are you just doing day trades? Are you invested in anything? Just curious. Be an interesting conversation. Let me know. So on Sunday, I wrote this analysis. I used this chart right here. Okay. Where's my, what happened to my arrow? I must have closed it. Huh. Okay. I used to have an arrow. Okay. So I wrote this analysis over here. Right. And I had this illustration in the analysis. I had this illustration where basically I was anticipating a push up into this resistance area right here. You see that? And I also wrote in that analysis that we're basically at the midpoint of the range here. And midpoints, anything goes, as you guys know. Hey, UTXO. Oh yeah, Qs, interesting. Okay. Options, interesting. Wow. You day trade those. Okay, yeah. I had a short call on, what was it, Wednesday, when we pushed up to like the 461, 462 area again. I sold the call, and then the market pulled back. I kept that, and since then I've done nothing. Yeah, like, okay, no problem, Nugs. I don't blame you. I'm trying. My goal is to get out of that effing position, but the market just doesn't go beyond that 465 area, and I really would like it to go back up into like that 465. That's my break-even point. So if I'm going to sell a call to get out, I'd prefer to be around there. I mean, I could bang out of the position anytime, but I strongly believe we can at least test 470. That shouldn't be that 20 points. It's not that hard for the Qs. It should be able to do it. And I'm going to sell an in-the-money call. I just want to get the F out. I just want to get out of that position. It's against me a little bit, but I've made $1,300 in the process of selling calls. So anyway, I know that's an aside there. I jump around all over the place. Let me continue with Bitcoin here. So I talked about the midpoint of this range, and I said anything goes, right? It's highly random. And look at this price action. It's a consolidation. You can't do anything with this. I mean, this is very hard to trade. In something like this, you can, if you're working on 1 minute time frames, you can basically attempt to trade the range, right? Because look what you have here. When we take a look at the look at these pin bars. You see this? There's a common level up there. You see those pin bars? That level is 85, 9. So basically 80, 85, 950, or 86, right? Right there is a pretty notable resistance level, which means on small time frames, you could take advantage of that if you get confirmations, like using the Trade Scanner Pro on the short side. Something like that may call for counter trend mode. But the point is, you can play that game on a small time frame, 1 minute chart, 30-second chart, something along those lines, right? And same on the long side. You have a support level. Looks like there's a common level right at these lows over here. What is that? 83,200, around there. Anything in between that, you're basically going to be at the mercy of the minor support and resistance levels, and you just have to play those as they come and go. But they're going to be very low probability, meaning it's going to be hard to judge, is this more likely to break or likely to hold, right? Because you're in a highly random area. So you're going to see a lot of breaks and holds, randomly. For a beginner, I would say just avoid the whole thing, right? There's just avoid. If you're more advanced and you know what you're doing and you know how to play that contrarian game when you're inside these ranges, then there are small bites. I believe there are small bites that are available. Okay. Oh, cool. We can take a look at that. That's cool. I mean, yeah, we could fool around with the Trade Scanner Pro, but I mean, it's kind of pointless. Look, I'll go to a 1 minute chart over here real quick. And I mean, look at this price action, right? On the 1 minute chart, it's all over the place. It's a range. So pretty clearly there's a range low over here, right? 84,477 area. That would be a place to look for longs. And then you have a range high up here. All right, what is that? Is that 84,731, which is not the same as that bigger picture range I just showed you. This is a range within the range. Those would be levels to consider longs and shorts if you're looking for small bites, right? But anyway, so back to the bigger picture. What I suspect, again, this move that I illustrated here, I suspect that this is still in play. Okay? I suspect that we can still test this resistance up here, the 88K to 90K area, before reversing. That's the range. Now, as far as placing probabilities, you have to understand something important here. This structure is a failed low, double bottom, right? What makes that even more relevant is when you zoom out, it's a higher low, failed low, double bottom. This low is higher than this low. That's very important. People lose sight of that. That higher low implies strength. So what that tells us is over the next few weeks, or maybe a little bit longer, this thing is more likely to break the resistance and start testing higher levels. Now, does it make it back to 109? I have no idea. Such a structure cannot help us forecast something like that. But what it can help us do is give us a sense of what are the chances this resistance breaks on this time frame. So on this time frame, what that tells us is shorting at between 88 and 90K is high risk. Shorting is high risk. It's possible that it still may work if you get the confirmation, if you're aggressive and you want to go for something like that. Maybe you can get a couple of thousand points out of it, but you're going against the probability. Doesn't mean it won't work. It just means there's a greater chance you're wrong, right? So something to keep in mind. The chance of the breakout following through is greater. So if you're a breakout trader, that's something you should be thinking about. Any pullback to this low is also likely to hold. Great opportunity for swing trades long, great opportunity for investments long. Even this current price area is still attractive for investment longs. This is because, again, if this thing is going to hold and we get into a wave 5, because I suspect this entire structure is a wave 4. Okay, I believe that all of this is wave 4, a broad wave 4. If that's true and we start breaking out, wave 5 confirmation, and I've pointed it out before, wave 5 confirmation means we're testing this level. That means wave 5 is in play, is what that means. And typically wave 5 makes the higher high. So based on this technical structure, 109 is a possibility, and higher prices are also a greater possibility over, I would say, the next quarter. Now, all it takes for something like that to start moving is a catalyst. And as you know, in recent times, we've had a lot of catalysts, a lot of surprise catalysts coming from the government, coming from all kinds of places, right? So all it needs is some unexpected news, and this thing's off to the races because the structure is there. There's nothing bearish about this on the bigger picture, not yet. To get bearish on the bigger picture, meaning, okay, I would not expect higher prices, I would hold off on investing. We have to break below 65K. That overlaps the wave 1, and that cancels out the impulse. So that means price would have to go here. If price goes there and we overlap, then that tells me that the impulse is not in play. Most likely we're just in a big consolidation or some type of corrective wave structure. And then I would be much less optimistic about higher prices in the future. Does that make sense? What does the Trade Scanner Pro say on the daily and weekly time frame? Good question, Hussein. We can turn it on and find out. Let's see what it says, as Jerry Seinfeld would say. So the Trade Scanner Pro is short on the daily time frame. See that? It's short. Actually, look at this. It's been short for quite some time, going back to March 23rd, March 24th. Actually, it called the short on this day, on the 27th. It called Bitcoin short, right? That's when this signal was generated. It called it short right here at this price. It came kind of halfway to the stop, but look, it pretty much went to the profit objective. It failed to touch it exactly, but as you could see, that was a nice trade. If you were able to sit through all of this noise, which is very hard to do on a large time frame. Of course, if you're sized appropriately, then it's easier. But this thing was short. Now, this short is still in play, and not only that, but we've retested the entry price, which means there's another opportunity to get short based on what the Trade Scanner Pro is saying. As you guys know, I like to, anytime we retest the entry price, I consider that a time to potentially add, or if you miss the trade, this could be a potential entry when it retests like that, okay? And in this situation, if you're interested on the short side, I think, again, I just finished talking about the long scenario. So the short side is going to be tricky. And plus, you're at the midpoint, right? Trade Scanner Pro aside, because remember, the Trade Scanner Pro is not a forecasting tool. It's a confirmation tool. It's not aligned with what the bigger picture is saying. Because what it's looking at is it's looking at a shorter view of momentum. That's what it's looking at. And it's saying that the momentum is bearish, and it's saying that, a test of this low is likely based on momentum. But the price structure can conflict with that, and I see the conflict. So taking a short here would be extremely aggressive. The risk on such a short is 7,000 points, which is certainly not the type of risk I like to take. But again, if you take a small position, a fraction of a Bitcoin, you could treat that like any other type of trade, any other type of swing trade. So that would depend on how aggressive or conservative you are. Personally, I wouldn't short this thing. I would not short this thing looking for this low. I just wouldn't do it. If I was going to short it, first of all, as you guys know, I'm not a someone who shorts Bitcoin, at least not on bigger picture timeframes. For a day trade, sure, a quick bite, no problem. But bigger picture, no way. This thing gets too wild. When it gets wild, it's just too wild. I would look for the higher low, maybe. That would be a good place, like a higher low area. If I was going to short for a swing trade, that would be more reasonable than this profit objective. All right. Now, you mentioned the weekly. Let's take a quick look at the weekly. Anything on the weekly? There's no signal on the weekly. The Trade Scanner Pro is not showing anything on the weekly time frame. The weekly shows the wave count very, very, like the wave structure, just so clear, so crystal clear. Look at that, right? 1, 2, I have them numbered. 3, right? And this 5, actually, that 5, when we go back here, when we really go back, that wave 5 that I have drawn, the question mark, is this wave 5. That wave 5 is relative to this structure. Wave 1 being back here. It's 2017 or 2018, right? That's the wave 5. If that's wave 5 of that wave 1, then that's not exactly bullish. But if that's 1, right, then we had 2. This is 3. This whole thing here was 4. Does this overlap? No, this barely overlapped. So this entire thing can be a wave 5, this entire impulse structure, right? A wave 5 of this entire thing. If this is a large magnitude, wave 5, if that's true, then this corrective wave can be pretty big. Meaning wave 2, if the wave 2 of that magnitude can go all the way back to these lows, 15K, that's possible. But the thing is, I don't know if this is a wave 5. That's why I put a question mark there. Wave counts are usually crystal clear after the fact. So this wave structure here, which is basically the 5th wave, right? We could be in wave 3 of it, right? Or wave 4 of it, which means we have one more leg. If we have that one more leg and that leg takes us to like 113 or 120 or something like that, that could be the 5th. The 5th of this entire price structure. If that's true, then a large magnitude wave 2 would be likely to follow, and that would be extremely bearish, right? That's where you don't want to be invested anymore. That's, but I don't think we're there yet, okay? And you can say, well, how can that be? Well, nothing fundamentally lines up with that right now anyway. Everything still lines up bullish. So that's why I suspect that in this little mini impulse that we have going on over here, right? This impulse over here, I believe that that's basically just, we have 4 waves of that broad 5. We have 4 waves of it, and we're looking for the 5th wave. With that 5th wave, like I said, could go up here, right? And that's going to get a lot of people long. When you get those, you're going to get all the clowns coming out. And we have clowns right now coming out saying, "Oh, these altcoins are going to make you rich." Those nonsense YouTube titles, thumbnails I still see them. People still believe that nonsense. That's how ignorant people are. Anyway, Bitcoin does something like that, the whole world is going to get long. Okay. And that's where you have to understand that when the whole world is long, there's no one left to get long. That is why you want to be out. You want to sell to these people, all these morons that buy in when it looks the best. You reduce your risk and you walk away. That is what you have to do in those situations. Not buy or buy more, or I'm going to go all in now. Now is a good time. It looks strong. Take your Captain Obvious hat off. You must do that. Otherwise, you're going to get caught like everyone else. Remember, the general public or the retail trader, they really only serve one purpose, and that is to make others rich. That is, they're constantly fleeced in many ways. And the market is just another way to fleece them, because people, they give in to their natural feelings, right? And it's human nature to look at something and react to it and extend whatever we see further. Whatever we see, we think it's going to continue because we can't see what's in front of us. So usually, like, remember just a few weeks ago with all that tariff stuff, and all the renowned economists were coming out on YouTube, "Oh, this tariff thing, this market's just going to keep going. I mean, the Qs are going to be at like 300 by tomorrow." Morons. Okay? Morons. And I came out that Thursday night, there's a stream, and I said, here's how I'm buying the bottom of the Qs. The Qs went a little bit lower than where I was saying the bottom was, like 60 points lower. But the thing is, no one saw it coming. But then what? The tariff delay. All the renowned experts, all the blah, blah, blah. No one was saying, oh, the administration will probably do something. Okay? And now we have a more stable market. So never listen to people, ever, because all they do is project forward what they see. And on top of that, that whole week, by the way, was it was really an opportunity to capitalize on attention because the stock market had everyone's attention and great time to produce dramatic content. Obviously, like I have the right ideas, but I never do these things. That's why I have no following. But great time to put videos out there that are extreme, right? Oh, we're going to zero. Even though they probably know we're probably not going to zero, they're going to say it anyway because it gets attention, and attention makes money for YouTubers. All right, makes sense? Okay, I know I'm on a rant today, but we have no trades to do. So what do you want me to do? All right. I want to talk about other things besides Bitcoin. Anyway, so you guys clear on that? Nugs mentioned there's a 1 hour trade going on. This must be the trade. This is a 1 hour. I have a 1 hour chart over here. I'm going to take these moving averages off because I don't use them. I just use them as an example one time as a filter. Steen, I believe, has something like that built into the new Trade Scanner Pro. So I have to see how that works. I don't see any trade. I see this trade. Oh, wait a minute. Are we in counter trend? Let's check. Let's check counter trend. Someone made an interesting suggestion. There is a counter trend trade. Oh, look at that. Maybe this is what Nugs was talking about. There's a short, and the what do you call it? The trailing stop has reduced your risk almost by half, and this short looks like it's working here. That's interesting. Thanks for pointing that out, Nugs. So someone made a suggestion to me about having a mode in the Trade Scanner Pro where you can see all the signals on the chart at the same time, meaning counter trend and trend signals will appear. Instead of one or the other, you can see both. And I said, well, the reason why we don't have that functionality is because most beginners especially will find that extremely confusing. But this guy was more advanced. So then I thought, hey, maybe we can do that. I mentioned it to Steen, and he's like, yeah, we can do it. So we'll probably at some point include a mode where if you want to turn that on, you can. Where you can see all signals, long and trend and counter trend at the same time together. If you don't find that confusing, then you'll have the ability to turn that on and off. Okay. Alt season. Ugh. Don't even get me started. These nonsense. They're so ignorant, man. And you know what really bothers me, Guillermo? You know what really bothers me? I look at the views on those videos. They have like 15,000 views, 20,000 views. I can't even get 300 views on my videos, but I don't do any uploads. I got to do uploads. Okay. Oh, the perp futures are long? Oh, okay. Interesting. They're long? On what time frame, Nugs? On what? Because this is here. I'm on counter trend mode, and I'm on the hourly. Let's turn counter trend mode off. I know. Hype certainly sells. Hype is the name of the game. It's called attention arbitrage. They just turn your attention into dollars. That is what they do. And the Bitcoin world is the worst. They're the worst. You have to be dumb to believe this stuff. But hey, that's where profit comes from, That's the 1 hour is long, Nugs? I'm not seeing that here. I'm on my 1 hour. Right? Here's my 1 hour. The trend is bullish. My counter trend is short. Unless I was looking at that the wrong way. No, that's short. Counter trend is short. I don't see a long here. I'm on the perp futures. It has been true that 25 point outperformed Bitcoin in every cycle. Well, yeah, but the thing is, Guillermo, they're looking at historical facts, right? and there's no guarantee that that's going to repeat. So you could say, yeah, they outperformed 25%. Okay, we may have had a couple of instances of that, but things change, right? Like, so for example, um, with the altcoins, or with Bitcoin and altcoin season in general, do you remember back in the day there were these things called NFTs, right? Now no one talks about NFTs, but they were the future. They were the next Bitcoin, blah blah blah. NFTs, you're going to make billions and trillions with NFTs, right? This cycle around, this bullish cycle on Bitcoin, what was it? Not the NFTs. It was the meme coins, right? Oh, go to pump.fun and trade meme coins. And not only trade them, you can make your own meme coin and you put some money into it, and you play the who's dumber than you game, and people buy your stupid meme coin, right? Remember that? So so that's the thing. Things changed, right? Money finds new interests. So that's why they talk about, oh, altcoins, they'll be back. Maybe. And it's not the same. Usually it's not the same altcoins, right? Hey, Dijon, how are you? It's not the same altcoins. It could be it could be some new ones that aren't even out yet. It could be some dumb, ridiculous meme coin that has absolutely no fundamental value. Just people are just in the mood for it, basically, right? That's how that meme coin stuff works. It's like you're in the mood. It's like, the internet has like a feeling for it. It's nonsense. So that's what I mean. That's why these videos, they mislead people. They go, oh, I'm going to get into the next altcoin season. I'm going to buy Dogecoin at the bottom. Maybe some new meme coin will take everyone's attention, and that one will go. And all the regulars, remember coins like IOTA and all that, they went absolutely nowhere, right? I mean, they may have gained a little bit, but come on, man. So on MEXC, oh, that's interesting. I'm on MEXC. I'm on MEXC. So I don't know. I don't know why we're not seeing the same chart. Is there something wrong with my chart here? I don't know. All right. Well, anyway, I'm not seeing that, Nugs. I'm not seeing a long. And in fact, look at this candle. How is this a long? I mean, I don't know. On the hourly? Are you sure you're on the hourly? There's really not much. There's nothing bullish there. Yeah, it is strange. Maybe is my stuff delayed or something? I don't think it's delayed. No, this is real time. Yeah, I don't know. Okay. Anyway, let's jump around to a couple other charts real quick because I'm not going to be here for hours and hours. So let's take a look at. Let's switch this over to the Nasdaq. All right. So we can do the Qs. Let's do the Qs because it's the same thing. I mean, so let's just see what the Qs tell us, right? We've been fooling around. It's the wrong button. We've been fooling around here, right? I suspect we can get back up. This is the 461 high. This big candle right there, that's the tariff delay day, right? And since then, we've been establishing a higher low. As much as all the renowned economists and everyone else saying we're going back to zero, we have a higher low right here. So far, that's market stability, in my opinion. I suspect we can retest the 461 or mid 460s high. That's what I'm hoping for, so I can get out of my position. Right? We have an inside bar right here. Right? Yesterday's candle is an inside bar. Is that today's candle? I think that's today's candle. Is that today? Well, is this thing open? No, this thing's closed. Okay, that's yesterday's candle. So we have an inside bar, and I just started a year ago. Yeah. So, well, a year. That's very little experience, right? So you're still in conventional mode. No offense or anything, but you haven't been through enough nonsense yet. That's what it is. So you still believe things that people tell you. That's you'll find out eventually. that's not a good idea, because no one knows anything in this game. You have to find your own. You have to build confidence on real information, the limited information that we can get. You have to put your confidence in that, not in the garbage that people proliferate all day long, which is mostly irrelevant and has no. There's absolutely no value when it comes to trying to determine where the market will go next. Absolutely no value. Okay, but people don't realize that. People they seek certainty, so they'll grasp at anything, right? That's why these news organizations have built such huge successful businesses, because they tell people what they want to hear, because people need certainty. So, oh, well, here are the levels, here's this, here's that, I forecast that Bitcoin is going to do this, right? And people, oh, okay, yeah, I like this guy. It's nonsense, all of it. So anyway, cues, right? So we could use charts to kind of give us an idea, and then we can gauge risk. That's it. That's all we can do, is gauge risk and decide, do we want to take that risk? So we have this situation right here, right? This inside bar situation. This can go either way. Now, if we break above the high of that inside bar, then we're looking at something like this, right? And all that requires is some news. All that requires is Trump to come out with a tweet, right? And we break that inside bar high, and here we are, testing those 460s with potentially a higher high, because this is a higher low, right? That's what I'm anticipating on the cues for the coming week. I could be wrong, but that's what the price structure gives me an idea to anticipate. If we break the lows, on the other hand, right, then that's not going to be pretty, because that opens up the possibility of retesting the low for a potential double bottom. That's the 400 area on the cues. So again, I don't know which way this thing's going to go. The general momentum has been bearish, right? Lower high, lower high, lower low. This right here, we can argue, is a lower high, and it theoretically should lead to a lower low, except if the market proves otherwise. It's attempting to prove otherwise. It's attempting, right, with that potential higher low, because a weak market should be producing a lower low, not a higher low. So right now, so far, this is a higher low. It may change, but we have to see. Okay, you guys follow that on the cues? So it's a matter of having a scenario and then letting the market confirm. That's like basically, and the Trade Scanner Pro really helps out with that too, when it comes especially to small time frame confirmations, right? But it's about having your idea, letting the market confirm. If the market does not confirm your idea, you change your idea. People criticize me. I used to get these criticisms. Oh, he always says it's going to go this way or that way. Pick a way, dude. That's the market, man. It's either going to go this way or that way. That's not the whole. You can't forecast the market accurately. I know that, but you have these fools out there who think, "Whoa, I want someone who could tell me the future." Yeah, go find that guy with the crystal ball. Then have fun with that. We need ignorance, though. We need that, because otherwise there wouldn't be any opportunity. So anyway, all right. Too many rants today. That's the cues. You guys have any questions about that? That's the cues. So it's going to be up to this higher low. If the higher low holds, we're looking at a higher high. And that's what I'm betting on. All right. So, and if I'm wrong, I'm prepared to hold on to those cues. If I'm right, I'm looking to sell another call against those cues. And I'm trying to get out. I would like to get out, at least on my stock position. I would like to get out at break even if the market gives me that opportunity. If I can get a higher price, I'll be happy with that too. Either way, I'm selling a call. All right. So that's the cues. Let's take a quick look at gold. XAU, USD, gold. Gold has been unbelievable. And it's clearly, this trend is bullish. There's just no other way to, it's just bullish. Okay. No, there's no ands, ifs, or buts. It's higher lows, higher highs. We are on the high. And we're starting to show a little hesitation up there, which may be signaling a short-term pullback. right? Because markets don't move in straight lines. Just a week ago or whatever, we had that nasty pullback. That was like over 100 points, that pullback, which led to a nice buying opportunity. So maybe we see another pullback. Where would be an ideal level for gold to pull back to? Right there. Okay. Hey, Stian, how are you? There he is, the programmer himself, the developer of the Trade Scanner Pro. Stian, I pointed people to your Crypto Snagger trading view page, but your script wasn't there. Were you? Are they reviewing it or something? Because I thought your script was going to be there because you mentioned Stian mentioned that he's going to be doing his script every month. What happened to your script? I pointed people to your page. Stian is trying to become a TradingView Pine Wizard. So when he has his scripts, I would highly encourage everyone to go there and subscribe and help him become a Pine Wizard, because that would be a nice thing for him. And he deserves it, man. He's very talented developer. I'm very honored to be able to work with him. So, because they're ridiculous, Stian. Come on, man. There was an emoji in the title. Come on. Oh, you republished it. Okay. Is it there now? Can you put the link in the chat? Is it there? I'll go back to the page if it's there. Or do they have to approve it again? They're ridiculous, man. They're like worse than, I don't know what happened to these people. Emoji in the title. All right. I guess they're maintaining their standards. All right, whatever. So as far as gold goes, yeah, this price level right here, 31.67, you could round that to 31.50. That would be a good place to look for longs. Okay? And you would look for confirmations there. That's your lowest risk location in this chart. It's that simple. You don't need to go read news. I need to look at the Kitco thing, and I need to look at this gold experts, and this guy's been in gold for 100 years, and blah, blah, blah. You don't need any of that. All you need is what I just showed you here. But you know what the problem with this is? It's too simple. So people overlook it. They're like, oh, it can't be that easy. It's not that it's easy. It's that we're simplifying the information so that we could make a decision that is in line with the market intent, and we can gauge our risk based on a higher probability scenario. That's what this is. It looks simple, but it's just a simplification of something that is something more complex, right? Everything I just described. So pullback, looking for higher low. Waiting, you just have to wait for the higher low. And what I just mentioned there, you can apply to anything. It doesn't have to be gold, but gold is just super strong. I also put them in the community channel. Oh, cool. So yeah, if you're in the Discord community, Stian put some stuff in there as well. That's cool. Yeah, definitely check out Stian's scripts. He showed me like a couple of them. Very cool. These aren't like nonsense, like moving average crossover scripts. I mean, these are like interesting, and they're definitely sophisticated, and they're free. All right. Exactly. Right. That's exactly right. It's a probability game. And I like to compare it to poker because it's very similar as far as the decision-making process to poker. And it's very similar to that. The market is not like poker, right? Poker has its own particular things, but the decision-making process and the risk management is very similar. And also placing probabilities on outcomes is similar. That's the kind of mindset you need to be in. All right. So anyway, yeah. So by the way, let's take a look at oil. All right, oil is CL. Yeah, we go to CL1. All right. Now, oil is also very interesting. It's mentioned a lot because basically they look at this. Energy is a big component of inflation. So lower energy prices point to less inflation or deflation, while higher energy prices stimulate inflation again, right? Because of all the costs involved with energy. Anyway, we don't need to know all those fundamentals. Oil it's an important factor. Whether you trade it or not, you should keep an eye on it because it can kind of give you a feel for things, right? If oil continues to rally, we'll probably see a more stable market. because I believe energy is a significant percentage of the S&P. I forget what percentage. It's a pretty high percentage of the S&P. I want to say 10% or something. I don't know the exact number, but it is a significant component of the S&P. So if oil rallies, that means S&P stability. If oil collapses, that means S&P is not going to be stable, right? And S&P means the whole stock market, basically, right? That's why you need to know those things. That's sort of like fundamental knowledge can just kind of give you a basic idea. You can't take trades off of that, but it kind of gives you a basic background idea, similar to like knowing the business cycle and the relationship of interest rates. It helps to know that stuff. Although you're not going to find trade setups based on it, it kind of helps give you a general gauge of the environment. Are we generally bullish? Are we generally bearish? Are we generally neither? And then from there, you can start narrowing in on more of a strategy that would be appropriate for that environment. Okay. So anyway, oil, which looks kind of like the inverse of gold, right? Oil, what we have here, let's go to a weekly chart. And oil, we zoom out a bit. Oil broke a pretty important support level, which was this. Okay. That goes back quite some time. Look at oil. Look at oil. Okay. I mean, look how high it was at one time. It's been consolidating for what, a few years? Yeah, a few years. And it broke the range low recently, as you can see, and it's trying to recover. This is a weekly time frame. There's a weekly pin bar that was established the previous week, and we broke above the high. That's a long signal on oil. So what that implies is that we're going to see possible rise in oil, something like that. I mean, I really can't forecast more than that, but that's a typical reversal signal, right? That's a typical reversal signal, especially if we can get back up to this minor level right here. If we can get back up to that area right there, all right, which is bullish for the stock market, basically, right? It means we're likely to see a higher S&P. Inflation, by the way, is bullish for the stock market because our dollar loses value and it takes more dollars, right? The prices go higher. It requires more dollars to buy that same asset. That's why inflation actually pushes stock prices or any type of asset prices higher because our dollar is worth less. I know that may be hard for some people to understand, but in this situation, if oil is basically giving us a gigantic failed low, which is what this is so far, then I mean, we reaching up into this area right here. Right here, let me draw that line a little more. This area right here. Reaching back up into this area right here is within reason. And that's oil is not even really doing anything. All it's doing is maintaining its range. It's not really bullish or bearish. It's just going back inside the middle of its range. Okay? What price is that? $70. So $70 oil is still within reason. That's just the midpoint. That's kind of a lower midpoint, but it's a midpoint of the range. Make sense? Now, is oil going to break out and break out beyond these highs anytime soon? I have no idea. We would need some kind of oil shortage. I don't know. We would need a major catalyst to get it moving like that, right? So typically when you forecast, you're only looking out about a week or two. You really can't forecast with any accuracy beyond that because, again, news items change. Geopolitical thing comes out of nowhere and now this has to be priced in, right? So you guys following me so far? So by the way, all right, so let me know if you have any questions. I'm going to be wrapping this up here in a moment. I want to show Stian's page here again. Stian says that it's updated, right? Stian, you said that the thing is there. So let's go back to that. Let's see. I'm gonna put it up here on the screen here. Hold on. Can I get that over here? Yeah, I should be able to. Just give me a second here. I'm going to pull that up. Excuse me. All right. Let's see. Let's see if it's there, Steen. I'm going to go to your page right now. I'm going to go to your scripts. Oh, here we go. All right. Check this out, people. Here's Steen's page on TradingView. Okay. This is his page. Go to this page. Right. His profile is Crypto Snagger. Just go on TradingView, do a search, find him on there. All right. Or just type that in and it takes you to this page. Look, he's got two of them here. Check that out. He's got his liquidity fracture detector and he's got his frozen bias zones. Right? Those are free. The liquidity fracture detector is an advanced tool to identify micro liquidity traps and structural fakeouts on intraday charts. How interesting is that? Okay, and it's free. So you can click on this. You can add this to your, to your toolbox. Make sure you go on here, read the description, read what he wrote about how this thing works, so you have an idea of how it works. All right, go there, leave a comment, tell Steve, give him some feedback. Let him know, do you like this thing? Do you not like it? Maybe there's some improvements he could make or something. Give him your feedback. All right, you could add some comments. So make sure you press the boost button over here. Right, make sure you press that. Come on, how cool is that? Thanks, Dean, for sharing this. So make sure you go to his page on TradingView and subscribe to his scripts. He's going to be coming out with one every month, he said. Right, so he's got two of them there. How cool is that? All right, so we covered oil, we covered gold. Let's take a quick look at the bond market. All right, ZN1, bond market. Right, the bond market, like I just finished saying, is so important. Oh, look, there's a signal. The Trade Scanner Pro is called the bond short on the weekly time frame. Remember, the Trade Scanner Pro, like I remind people, it's not a forecasting tool. So it's very possible that your forecast may be conflicting, the signal may be conflicting your forecast. What carries more weight? Your forecast, not the signal, right? The signal has to confirm your forecast. If it does the opposite, then ignore the signal because the forecast is going to be considering things that the Trade Scanner Pro cannot see. That's why the forecast carries more weight. And that's why in every stream that I do, the first thing we do is we do our forecast, we do our analysis, and then we go to the Trade Scanner Pro. If there's any signal on that chart, I'll turn it off or whatever until we have our idea first. And then the Trade Scanner Pro has to confirm it or not. That's how you use it effectively. Anyway, so we can turn the Trade Scanner Pro off because it's not really going to be helpful, right, in this situation. And I don't want people to be confused. So let's see. Let's see if it lines up with our analysis anyway. These are bond prices. It's a 10-year note. This clearly is a consolidation. It's been in a consolidation for some time, and we keep rejecting this level, that line that I have in the chart. That line has been on my chart for a long time, by the way, and we keep rejecting it. This here we had this the other day or whatever, or that was a tariff delay week, and they're like, oh, the dollar is going to lose its dominance and blah, 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 and the Chinese are selling all the bonds and blah, 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 whatever. Okay, yeah, right? That may be all true, but don't get sucked into the drama. There's really nothing going on here yet. All we can say is factually what we have is a range. Okay, range. We're in the middle of the range. This week we have an inside bar, bullish inside bar. We break above the high of the inside bar next week. All that tells us is nothing is going on. That's what that tells us. Because until we break this range, there's nothing going on here. So don't jump to conclusions. Don't overreact. It's all nonsense. When can we confirm, TA-wise, a fifth wave? Well, on Bitcoin, I answered that question earlier. To confirm that the fifth wave is in play, we need to test the 109K high. To confirm that it's established, that the fifth wave is the fifth wave. That's, which means, can you confirm it earlier? There's structural confirmations, like we break the 90K resistance area. We push that. that would be a higher high and a bullish structure likely in play. But it's hard to confirm that wave 5 until wave 5 is officially at the high, because then it should be making the higher high, going beyond 109K, right? That confirms wave 5 is now in play. But obviously, between 90K and 109K, that's a lot of space in there. So there should be a bullish structure in there sooner, obviously, if it's working its way up to 109K. But wave count wise, I would not consider wave 5 to be in play until we get up there, right? But of course, like I said, there are many ways we can gauge it sooner. All right. So, well, technically, after the all-time high, that means because wave 5 needs to make a higher high. It needs to break above the high of wave 4, right? Or the high of wave 3. It has to break above that high to say that wave 5 is in play. But that doesn't mean we can't detect it earlier, okay? Because obviously there's going to have to be bullish structures in place to even get up there. So that is just basically, it would just be a further confirmation. If we got up there, then I would be anticipating higher prices. But I'm not going to wait, of course, right? We don't have to wait for it to get up there. You can take trades earlier, much earlier, on bullish structures in anticipation that wave 5 will be confirmed. Make sense? Okay, so back to the bonds here real quick. So what's going to be eventful for the bonds is we have to break the range low. The market has to decide this, not us. The market either breaks the range low or we break out of this consolidation, we break the range high. Now, based on the general structure here, this consolidation is a lower high consolidation, which is bearish, okay? This consolidation, these highs right here are lower highs relative to these highs. So lower highs typically lead to lower lows. This is poised to go lower, which means the Trade Scanner Pro is correct. I mean, the Trade Scanner Pro is calling this a short, and it's a short. I mean, it agrees with the bigger picture. It agrees with the analysis that we just derived here, right? And this short was just called on tariff delay, right? That week, that's the red candle. The short was called, it was generated that week, right? So this is saying it's not forecasting. It's just saying that it's very plausible that the bonds could test a new low. That's where the profit objective is. That's a lower low. But keep in mind something. Keep this in mind. This lower low, the profit objective, it's not exactly a dramatic lower low. So while the general trend is bearish, if it reversed right there, we could still be maintaining the range. And remember, you have an administration out there that's going to be fighting this. They don't just stand around passively, but, well, it looks like the bond market's selling off again. They're going to be doing things to turn this around, right? They're going to be doing things because the problem with the bond market sell-off is if it goes too far, we're going to have failing banks. We're going to have bank failures all over the place because interest rates will be too high and they're going to get margined out of their positions, and we're going to have bank failures. So someone has to step in and hold these bonds up, okay? And these are government treasuries. You think they're just going to stand aside? They can print money. They can do things. They can talk market. They can talk and markets will move, right? So just something to keep in mind. They're not going to sit back and do nothing. And they're going to want to do what's in the best interest of their agenda. And that would mean hold bonds up. Don't let the bonds collapse, because if they do, we're going to have bank failures and that's going to look bad. It's going to look real bad, right? All right, guys, I've been talking too long, but I start getting into it and then I can't stop. So we covered the bonds. Anything else? What have I missed? I mean, the dollar index is going to be similar to this, DXY. Okay. I mean, the thing is, there's been talk about this too, where the dollar index is not performing in line with how the bonds are going. Rising interest rates, which is inverse of the bonds, the bond chart that I just showed you, because those are bond prices, not the yields. When yields are rising, the dollar should be rising. This isn't rising. This is the dollar index. The dollar index is on its range low and it closed weak. Okay. This is unusual. So they're saying that this is a big problem. okay? And the dollar is losing its dominance. Countries are losing faith in the dollar. This is a dollar against other currencies, a basket of other currencies, and it's failing. That's not a good sign, right? This is not a pretty picture. All I can say about this is, yes, it's broken. You could argue, we can argue, we have the lower low relative to this low over here. Let me just show you that real quick. Relative to this low, it's lower, but it's slightly lower than that low, which means we're basically at the range low. You have to understand something. When you have a range low, there's like a threshold. There's like an area here, right? Where it's possible that the dollar can just go slightly lower, kind of like this pattern right there, and give us the failed low. We have it also over here, right? Failed low. This could just be a gigantic or a large magnitude version of a failed low. Usually at the failed low, people overreact. So the only positive thing I can say about this is that this structure, that bullish structure, is still in play. And we may get a failed higher low in this area and see that turn around in the dollar. But I don't know. I mean, the bonds are doing the right thing, right? The yields are going the right way for that, but this thing is not doing it yet. So I don't know how they fix that one. That one, I don't know. Okay. I don't know what they're going to do with that one. But technically, we can't really, the momentum is bearish, but the general structure may still hold. So we have to see how that plays out. All right. That's the dollar index. So anything else? Anything else you guys want to see? What else can we talk about here? Right, we got the Nasdaq, we got the SPY. Right, SPY is going to look just like the Nasdaq. Right, here's the SPY, the S&P. Right, on a weekly. This isn't exactly bearish. Right, everyone's the stock market. That's not exactly bearish, and that's why I was telling people a week and a half ago, this is a buying opportunity. I have a stream. Go watch my stream. I was talking about that, those unusual buying opportunities. You can't get caught up with all the nonsense that people are putting out on social, whatever. You can't get caught up in the nonsense on Twitter. And you can't, just because these people sound smarter than you doesn't mean they know anything. And let me tell you this, people that actually know real material information usually don't share it. Okay. We get some exceptions. Like you had that guy, there was a guy who actually called the 90-day tariff delay 3 days in advance. He put it on Twitter and the market actually reacted to it. But then it turned out they called it fake news. That guy obviously knew something. And then that Wednesday, Trump comes out with it, right? Trump even gave some inside information earlier that day and told people good time to buy, right? So yeah, you get occasional, but those instances are so rare, right? Those are people who had inside information and actually shared it. But most of the time, anyone that has real material information, they do not share it publicly. Just keep that in mind. All right. Watch the VIX 44 MA on the 6-month chart. You can see all. Okay. Interesting. The VIX, the 44 moving average on the VIX. The VIX. Let's see. Well, I'm not going to put the moving average on the chart. I mean, the VIX. Here's the thing with the VIX. The VIX is just a measure of fear, right? It's basically people buying puts, more puts than calls. That's what that means in the S&P, the SPX in particular. So when the VIX spikes, that usually means people are panicking, right? And often that leads to a buying opportunity, right? And when the VIX gives it back like this, what's the VIX at right now? When it gives it back, that means the market goes back toward more complacency. People aren't buying puts anymore. So it's really like a contrarian tool, but that's interesting. I mean, you could trade that thing too. I look at the VIX. I look at the VIX when I'm interested in selling options, like option premiums. The VIX kind of gives me an idea: am I going to get fat premiums or am I going to get thin premiums? Because if the VIX is very high, the premiums have more inflation in them. especially the put side, right? You're getting inflated premiums, which is just basically hot air and easy money. It's easy. It's easy money to make if you understand what you're doing with that. But of course, there's always risk. So you have to understand. I'm not going to get to options right now. But okay, thanks for sharing that, Ron. I am out of the stock market. All those pump stocks go back. Okay. On the 10-year chart, I am watching to catch them beneath it. Okay. Well, I mean, that makes sense. At least you're not buying the highs, right? Like everyone else. So, all right, you guys, any other questions? Thanks for participating a bit here. I thought I was going to be alone today completely. Got a couple of people watching. If you haven't done so yet, please press the like button. Please subscribe to the channel. It helps. I do plan to come out with uploads. I will. I know. I will. That's the reason why my channel sucks, because I don't do any uploads, and everyone else, all my competitors do uploads. Some of them do a few uploads a day, and most of them stream every day, all day. I can't do that. Come on, man. I can't do that. So it's very hard for me to compete with those people. So anyway, if you have any questions, you can always reach me at marketmarketmarkets.com. You can send me a message here on TradingView. Those are the best places. And make sure you try out the Trade Scanner Pro. Give it a try. 14 days for free. All right. I haven't gotten there's no Trade Scanner Pro here today because the market's closed. But join me on my stream 3 days a week when I do use it at the market open. Okay. Those are very, very, very insightful sessions. They're all on my channel. Go back and watch a few of them. Right. Where we actually trade the Nasdaq on the prop account. You could go strap a GoPro to your head. Yeah. UTXO. I don't know if you want to see something like that. Okay. But some people do behind the scenes stuff all day long. I don't know. Yeah. A GoPro to my head. That would be funny. Yeah. And I could just stream all day. Like you guys want to see me all day. I can't believe you guys spend this much time with me. So anyway, but I appreciate that. UTXO likes me. He would probably watch me all day. But anyway, all right, you guys. So do me the favor. If you're on Twitter, subscribe to there too. I mean, my TradingView stuff goes on there. I know I need to be more active on these social channels, but I'm like an old guy. These social things are. It took me a few years just to figure out why Instagram is Instagram. Like why do people even use this? It took me a couple of years to figure that out, people. That's how slow I am. So anyway, yeah, so I'll leave you with that. All right, you guys. So remember my regular schedule. Come join me on a market open where you can see me actually trade the Trade Scanner Pro in an account that is meaningful, because we're trying to beat the prop firm eval. I'm slightly ahead on that account. I still got a ways to go now because I had to come back from, I was losing. I had to make that money back. And yeah, sure, I could have reset the account, but I don't want to reset the account. I want to do this without doing a reset, right? So we're slightly ahead now, and we'll see how it goes. So guys, join me for that. It's a very insightful stream if you can. All right. So anyway, all right, you guys. So I'll leave you with that. Enjoy your holiday. Take a break, relax, get away from your computer and all those things, and refresh yourself so that, when the market opens again, you guys have a fresh set of eyes. All right? Any questions? Any questions before I, yeah, happy Easter. That's right. Happy holiday, happy Easter, all that stuff. All right. I'm just looking at the thing here. Cool. All right, you guys. So enjoy the rest of your day. Well, happy Easter, everyone. Happy holidays. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thank you again for watching.